Welcome to the Trading Lounge and the FX report, and starting with the US dollar index here. In a bit of a nutshell, if the market is above 95, the closest largest number, then obviously it's a bullish trend from that point of view. We've got two counts here on this particular pattern. First of all, a triangle pattern, an A and a B and a C and a D, and looking for the E wave here and then up from here. The other one is that a simple, reasonably simple, an A and a B and a C wave here, and then a move up from that point. Just drilling into that somewhat here. From wave D here, we're looking for wave A and then A, B, C for the B. Bit high, but that's fine. And then a wave C here. Now, this wave C here can finish like this here. So pretty much an A and a B and a C to finish here. It's probably going to be a lot lower because it took out the high here. It means that it's strong. So normally we would be looking for a 61.8 retracement level from here to here, which would be sort of roughly here. But because it's taken at the top there, it's strong. So it might just be a little, push up from that point there. So just be a bit mindful about that. And so any strength next time you see coming into this leg here, then you'll know, and certainly support on 95 is the confirmation that the market is going to move higher from that point. So main point though is that this is a corrective pattern. That's point one. Point two is that once it's complete, it will go up. And point three is that this correction is nearly resolved across here. The balance line for this correction is about 94.40 through here. So and confirming once it's above there, which brings us to, once this resolves itself here, really affects many of the other markets, but the other markets are starting to make a move now anyway, except for the euro US dollar, which we'll look at now. We've got two counts for this too, unfortunately. As you know, it's a corrective pattern, and it's a corrective pattern because this first leg here is in three waves, a very clear three-wave swing here. So that makes all of this corrective. And, we're just basically looking for confirmation to get a trade out of this. And we've been patient and we've done all the right things. Otherwise, we would be chopped up through here. And essentially, we're either looking for the 13 here, the number 3, which is the important point here, as a retested resistance for here. So we'd be looking for a move below here, then a move up. That's the reference point, and then trade from that point there. However, because this is a correct pattern, we could also, unfortunately, the wave secondary count for this is that we just move up here in 5 waves here, and this wave here would be wave 1 and back for wave 2, so it would be moving back up here, and also to the wave 4 of 1 lesser degree, which is up here as well. So this is quite possible here. So we're going to go in here, and obviously we don't want to miss either of them. And this one here is quite simple in terms that a move down through here below this previous low here, and then a retest back onto number 3 here, and failing that, and then moving down from that point. So that's pretty simple, that one. So let's go in and have a look from the long side perspective here. We'll just drill in a little bit further here. I mean, as you can see, it's it is resolving itself through here, and it's a time that the normal things with corrections is that especially when they go sideways and they're complicated, they basically bore you to death, and then you go and find another market to trade, and then suddenly you look back and this market's taken off. So it's very important to create a bit of meditation into corrections, and so you can get the breakout. Now, if there's going to be a breakout, this is how it's going to be. This would be wave 1 here, and then we were looking at this yesterday as a wave 2 here, and that's fine because it didn't take this low out here. So this wave 2 as an ABC is still in play here. So we would need to see the market basically work itself to the upside here. We're kind of expecting that anyway with the triangle pattern that we've got, and we would be looking for a small 5 wave structure up here for wave C here, and then folding here. So we've got one that moves this way and one that moves this way. So it's going to be a little bit tricky. So you could imagine that this time around, this is a lower high than this one here. So if the 14 became the support, then you can move in long from that point there. Now this is just on the 15-minute chart here. So we were looking at this being wave 1 here, and an A and a B and a C here, just imagining the long side for a moment. So we know that 14 here, that support on that would give us to the long side, and this move up here does count nicely as a 5-wave structure in terms of 1, 2, 3, 4 and 5 here, and then the A wave, the B wave and the C wave down through to here. So I think that the group 2 here obviously carries some weight here as well. So support on 1372 here, the orange line here, if that comes into play, if that comes into play, you'd be able to feed onto that side there. So a contract on that side, a contract on the 114. And if you're very keen, then the midpoint here is also very important as well. That's the halfway between 113 and 114. So support on top of that midpoint there. The 50, a tested support, not just trading above it like it did here and then the retest fails here, but actually sitting on there and creating a reference point. So that would be the current reference point there. So you could move in on that support, and that support to build a trade into the upside. But once again, either way, we're kind of expecting it up that direction anyway. So we need to be a bit careful about it. It's not quite ready to rock and roll yet. There's probably better markets to trade, and we'll look at those in a minute, and that's the Euro Australian, Euro Yen and Pound Yen and so forth. So the Australian dollar is very much like behaving like the Euro. It's in sort of no man's land, and it's not giving a very clean count. I mean, the bottom line for this, or not the bottom line, but we were looking for an A wave, a B wave and a C wave to retest this area here, which is the wave 4 of 1 lesser degree, and then a move down from here. We can see that the old highs here are getting very tired here. This market's really starting to creep here and getting overlapping wave structures. So it's very possible that we could have this in here as well and just fail from where it is, like the Euro may do as well. So if we were looking on, if we're looking on the long side, then we want this, obviously this this top here at first instance, the 78.50 to be taken out from here, and then we'd look at that to go long up here. On the short side, we wouldn't short this unless this number here, 7772, became the retested resistance, and then we can look to trade from that point there, okay? So just drilling in here a little bit. For what it's worth, we can see that we're looking for 5 waves up from this low here. We've got a very nice 1, 2, 3, 4, 5 here for wave 1 and wave 2 here. Then we've got 1, 2, 3, 4 and 5 here for the third wave. And then we've got the fourth wave here, which is rather sharp. And then we've got a possible 5th wave in here. So it does count that it could be complete. But the other count too is that we know that the 38.2 retracement level is higher up near the 80 up here. So it's quite possible that this here is just from wave 3 here. This is an A wave, and it does appear to be a bit of a B wave. So that can be a B wave and then a C wave down to here, and then up from that point there. So we need to be a little bit mindful of that too. So that's why the 77.72 is a retested resistance. Now I'm kind of expecting this to come down to this point here anyway, okay, because this here appears to be corrective here, and I'd also be looking for 5 waves down from that point. So just drilling in here a little bit further, just on the 15-minute chart, you can see here that yes, it is sort of impulsing to the upside, and that's fine, but at the same time we're getting overlapping wave structures here. So it does make this appear to be corrective. So it would be, it would view it as needing to make a new low below this low here. but it can bounce from that point there as well. But this point here then becomes your reference point. So once it comes down, if it comes down through here, then goes back and then comes down through here, this is where you would short it. That would be the process for a safe bet on that side there. And of course, to the upside, the 78.30, the top of group 1 as support, would be the long trade from that point there. Okay, so it's basically this market's like the euro and some others are working themselves into corners and starting to make a move. And this is a pretty sharp, convincing move to the downside here. This is creeping weakness here. This is confirming weakness. This is another point of weakness here. So the other point here too is that if we get 5 waves from this high here down to the 72 area here, the retracement here can be the ABC retracement here and then moving down from here, but it still comes into this reference point here. Okay, the pound yen, so that Australian dollar can go both ways. We're still looking for it to go higher, but at the same time, if we get a setup with that 72 there, then that's important there. Now, with this market here, the pound Australian, I made a little mistake yesterday. I was looking for one more little wave down through here and it didn't come, but in my sort of going back over the errors of my ways, I could see that I'd actually found the 5 wave structure within here. It's just the extended fifth here. We were always on the track of being an A wave to here, a B wave back up to the 50, 61.8%, whatever, and then the wave C here. And I thought that the wave C would sort of bounce off here, but we've obviously got some really strong support at the 95 here. So now we're counting 5 waves up. So basically in a bigger picture, if you know the levels, the classic trading levels pattern, at a level, and the level here is the major level 2 here. So we've got the arrival, we've got the reaction in 3 waves, and now we're looking for the first high above the level. Okay, so in that case here, we need to sort of focus on this particular structure here. And in doing that, it would look a little bit like this to start with. So up for wave 1, ABC for wave 2 here, and then wave 3 here in 5 waves. So 1, 2, 3, 4, and 5 up through to here. So we can see we're at the 198 here. And once again, we've got the classic trading levels pattern, the arrival, the reaction, the first high above the level, and now the correction. This is definitely a correction here. It can get a bit larger because it's a wave 4 here, and then we'll see up for wave 5. I'll just go back to this point here, because once we've got 5 waves up here, then we would be looking at this in terms of a larger 5 waves to the upside. So we'll be looking at this as wave 1, wave 2 here, wave 3, 4, and 5 up here. So basically 1, 2, 3, 4, 5, A, B, C for wave 2, up for wave 3, back for wave 4, being complicated here, and then up for wave 5. That's what we're looking at here. So obviously the safest thing is over here, but at the same time, there's opportunities to be had in here. So just drilling into the 98 level here for a moment. The first thing I can see here is that this move down through here on the 5-minute chart is corrective. So it can blow out a little bit further, but it is corrective. That is corrective. So at some point, we'll take that high out. Yes, it can work into the range of wave 4 of 1 lesser degree here. So yes, it can do this and it can do that. So you'll need to accommodate that situation there. The Euro Australian as well. Now, we're also looking for an ABC correction here, an A into B into C here, and we're looking for a move up here, back into this trend line through here. We're kind of trading against the trend here a little bit, so we need to be a bit mindful. But working this little pattern here, there seems to be an opportunity in here as well. So just on the 1 hour chart here, we're looking at this as the A wave, the B wave, and the C wave up through to here. This length here will be roughly the same length as this one here, so that's where we're sort of looking at here. I always like the 65 number, which is actually the 4650 here, so halfway between these two numbers here would be a reasonable target here. So just drilling into that further, the move up through here, as we looked at the other day, is in a nice 5-wave structure here, so we can look at that as wave A, and then we're looking at A, and then the B, and then we've got nice little 5 waves here for wave C. So we should be moving up from here. Okay, so we should get once again, we should get this leg here over here. So that's where we'll be looking for here. So 146.50 is a reasonably safe target. And, excuse me. So this little structure here so far, it's not giving us 5 waves so far. You can see we've got 1 and 2 and 3 and 4. So we really need to see wave 5 here. Then we've got 1, 2, 3, 4, 5. Then we'll get the A, B, C here, and then this would be wave 1 here, wave 2 over here, and wave 3 up through here. Okay, so it's nice to just get that one more high here, look at a corrective pattern across these old highs here. Maybe we can just drill in here on a 5-minute chart. That makes it easier. So you can see from this low here, we got 1, 2, 3. So that can be counted as an A and a B and a C. So it could fail from here. We don't have 5 waves up there so far. We would need to see 1, 2, 3. It's a deep 4th here, but would need to see wave 5 here, then an A, B, and C here, and then up from there. So you need to see those 5 waves here first, okay? Then a corrective pattern, then you can go up from that point. Another way to look at it is support on the midpoint here, the 145.50, would also get you up there as well, but you would need to leave the stop out of the picture here. Okay, so there's an opportunity there if that becomes support. The euro yen. Now, once again, we're expecting this to move higher as well into the 38.2 retracement level here. This particular pattern here appears to be corrective, so we should get this here. But at the same time, you can just simply see how weak it is here. We're getting these lower highs here. It's struggling to get support up through to here. So it can, like the euro US dollar, it can fail from here. So you need to keep a close eye on the US dollar index, the euro US dollar as well. And yeah, but let's just go in and have a look at this, because the odd thing here is that this move down here is corrective, right? So we should make a new high above here. This move here appears to be corrective, so we should make a high above here. This here appears to be impulsive here, so we should make a high above here. So let's just go in and look at this again. So this is what I was looking at here in terms of an A wave, a B wave, and a C wave here, then up for 1, back for 2, and then moving up for wave 3 here. So with that in mind, first of all, the first thing that we need next, I mean, this can move down from here as well, but the next thing that we need to see is support on the closest largest number. That's right, 135, and 5 is always a good number to work off if I've got a smaller chart here. So this would be the wave 1 to the upside, and it's quite a nice, as it stands at the moment, it stands at a nice A wave, B wave, and then C wave here in 5 waves. You should be able to count the waves, the 1, 2, 3, 4, 5. So that should be about the low here. So just simply, we just need support on 135, that's all. And I suggest building the trade in over a period that you have 135.50, the midpoint, as support there as well. So a position on 135, another position on 135.30, the top of subgroup 1, okay? Subgroup 130, way up here. And then the 50 here, and then you're right to go from there. You can add even more on the 50 here, but if you build in lightly here, then it's not such of a, you don't have to sweat it out, because it can fail from the 135 here. That's the main point here, okay? So just give that some time, and if you see a nice tested support there, and once again, tested support looks a little bit like this here, don't chase the first high above the level, because it will fold back and test it, okay? You can get in over here through these little, through strength here, or through your reference point here, but you want that retest. That's what you're looking for there. Okay, the pound yen, also a bit of an opportunity here as well, and the opportunity comes in because we can see that the move from here down to here is in 3 waves, okay? So we've got an A and a B and a C here that we're looking for, and then we're looking for a move higher here. But if you look closely in this little correction here across 83, the top of group 1, very important, it appears we're getting support on there now, which will set the target for 85. But that little pattern in here is also corrective as well. So we've got this as a corrective pattern. We've got this as a corrective pattern. We're sitting on top of group 1. So it's positive to the upside. So a reasonably confident situation occurring here. So just drilling in here to the 1 hour, and here you can see that we've got that that A wave, that B wave, and C wave here in 5 waves, the 1, 2, 3, 4, 5 here, and then we're moving up here. And as I mentioned, this pattern here is in 3 waves, so it's corrective. So that would have been the perfect entry point here, but that's okay too, because this little move up here appears to be one of the first legs to the upside, so that's going to struggle at the top here, so it'll pull down here as well. So to recognize that in terms of a corrective pattern is important too. So we can look at this in terms of 1 and 2 and 3 and 4 and 5 here, and then an A and a B and a C. So it may come back to 83.50 here. One of the main points that you need to be looking for is to study the types of corrections that it has before, and that's what we'll be looking for here, and then a move up from that point there. So it's hit 84. It's you could also do the classic trading levels pattern as well, where it's got the arrival, the reaction, the first high above the level, then the corrective pattern here, and then up from that point there as well. So yeah, look, a long opportunity is presenting itself here. Let's see if I can get into 5 minute. No, I thought I had a 5-minute chart. I didn't there, so sorry about that. Otherwise I would have broken this down and really sort of nailed it there for you. But main point is it's hit 84. Expect a corrective pattern either across the level, below the level, and then look to move in from that point there. Alrighty, well, that's it. So yes, look, there's as I mentioned yesterday, the US dollar index in its pattern here is starting to resolve itself. Yes, it could push straight up from here, but we're expecting it to move down first and then up through there. But once this is completed and it is on its way up there, then all the other currencies are going to be moving accordingly. And so basically prepare yourself for a trend. Yeah. Alrighty, cheers.